Hi. Let's learn about earnings calls. An earnings call is when the management of a public company has a conference call with analysts, investors, and the media to talk about the company's financial results for a specific period, like a quarter or a fiscal year. It usually happens after an earnings report with a summary of financial performance is released. Most listed companies have earnings calls to discuss their financial results, while some may provide a phone recording or presentation of the call on their websites afterwards. The purpose is to share detailed financial information and have a conversation about the company's performance. During an earnings call, company management talks about the details of its SEC Form 10-Q or 10-K, which are reports required by federal securities laws for publicly traded companies. These reports contain detailed financial results and a more in-depth discussion of the company's performance and future plans. Analysts use the information from earnings calls to do fundamental analysis of the company, looking at its financial statements and listening for verbal cues from the management. This helps them understand the company's financial health and make informed decisions. Earnings calls provide a lot of information for investors and analysts, and allow them to ask questions. However, preparing for these calls takes time and resources, and some questions might not be what the company wants to focus on, affecting its image. Despite this, earnings calls give investors quick access to important information and help them make trading decisions. On April 28, 2021, Apple held its second quarter earnings call, where CEO Tim Cook and CFO Luca Maestri discussed the company's performance and future plans. They talked about revenues, expenses, products, environmental commitments, and investment plans. Analysts also asked questions about pricing, gross margin, and how the company's initiatives would affect its expenses. The purpose of an earnings call is for a public company to discuss its past performance, future plans, and answer questions from analysts, investors, and the media. Before listening to an earnings call, it's helpful to prepare by reviewing the company's previous call and reading subsequent analysts' reports. Pay attention to the results, benchmarks, plans, and risks, and analyze management's tone and answers to analysts' questions. Earnings call recordings are usually available on the company's website for a specific time, while transcripts are available for longer. You can also find recordings and transcripts on investment websites, and if not available, review the company's earnings report on the website or the SEC's website. In conclusion, an earnings call is a way for a public company to communicate with the financial community about its performance, risks, and future plans. It's an opportunity for analysts and investors to gather important information and ask questions to help in their analysis of the company. Here are 5 key takeaways. 1. An earnings call is a conference call between a public company's management team and interested parties to discuss earnings for a specific period. 2. The company discusses important aspects of its quarterly 10-Q report and annual 10-K report, particularly from the Management Discussion and Analysis (MD&A) section. 3. Analysts use information from the earnings call in their fundamental analysis of the company. 4. Companies often publish an earnings report immediately before the earnings call. 5. At the end of the earnings call, participants are allowed to ask questions. Hope this would help. Thanks for watching.